Googie, welcome back, mate.
G'day, Mark. Good to be back.
Stephen Koukoulas. We're going to be a bit formal today.
Okay.
Economist, extraordinaire. But on my right-hand side here, we've got another guest today, which is pretty unusual for us, but we've got Bill Evans, Chief Economist from Westpac. And it's very rare you see Bill Evans come out. I mean, I don't mean it like that, Bill, but yeah, get amongst it. And it's really great to have you two guys sitting here to talk about interest rates, obviously, the economy. You know, where do you think we land in terms of the official cash rate between here and, say, this 1 year from now, this time next year? So do you think you're saying, Bill, what number?
Oh, I'm saying two
today?
And a quarter. And
Two and a quarter.
That'll be it.
Yep.
I'm saying they'll be front-end loading it. The same as the Fed.
Yep.
I don't think the RBA is going to be too far out of step with the Fed. They've started a bit later. That's why they'll end a bit later. But I think that the Fed will finish at the end of the year and the RBA will be around the middle of the year. But I think general expectation is it'll go longer, but we don't sort of buy some of the other views.
And on Tuesday, the 6th or 7th of June, what do you think the RBA is going to do?
Oh, look, it's a very interesting issue. Anyone that went to the press conference when the governor said, well, we're back to business as usual, 25s, would assume it's 25.
Right.
I said, no, I'm going to predict what the best policy is rather than what I'm being told. And I said it's got to be 40. You've got to front end load this. Get ahead of the curve. And if you do 40, that'll give you the cash rate will be back to 75, which is where it was before the emergency.
Correct.
There's no argument you can say that you should still have those emergency cuts of 2020.
Steve?
Agree with that. Yeah, front load these rate hikes. They are a little behind the curve, and they're going to be, I think, well, forecasting monthly or quarterly numbers can be a bit of a hazard. We all know that. But I think if they go hard and at the next couple of board meetings do move that cash rate to 1 1/4, yep. So whether they go 40, 50 and those sort of increments, I'm not sure. It's a tough call to make. But it will be whatever they do.
Make the
if
calls.
it's big,
Steve, what do you reckon?
I'm with Bill. We go 40.
0.4.
0.4 to 0.75 for the cash rate at the June meeting. Probably 50 the one after that, because the one after that they're going to have another very high inflation number before them. They'll probably have an unemployment print at 3.
No, they won't have that number.
So
the
at
one
the end
after
of July.
August.
August, yeah.
By then they want to get it to 150 probably. They'll get an unemployment reading 3.7. Yeah, certainly 3.8. It was 3.85 and 2 decimal points the other day. So they're going to get a really low unemployment rate. And we're going to be hearing, while the government might be tightening fiscal policy a little, the submission to the Fair Work Act, we don't get wages numbers, unfortunately, all that frequently. But there's going to be enough information there and from overseas for them to say, okay, we're going hard, we're going early, and early on is easier. Later on's harder to make the call.
But it'll also be in the through the wealth effect and house prices.
Well, that's what I was going to get to. So you guys, Westpac, has sort of said 10 or 11% house price reduction on 225. Is that sort of where you're at?
Yeah, I'm thinking peak to trough about 14%.
14% reduction.
Year, I think we'll start to lose momentum.
Middle
quickly.
of this year, you mean?
Yeah, Sydney and Melbourne are already contracting.
Correct.
And Brisbane's still doing really well because of extraordinary affordability story.
But also migration.
Yes, they've done extraordinarily well in what we call intrastate migration. Yep. So New South Wales and Victorians,
particularly Victoria,
gone up to Queensland. So population growth in Queensland, the latest data we've got was plus 1.1%, in Victoria minus 0.5%.
Yeah. Which makes sense. By the way, makes sense from my point of view, being a Sydney boy. But so let's just conclude this. So we're looking at perhaps a rate rise somewhere between 0.25 and 0.4% in the June meeting. Potentially, we could get this up. The rate rises by the end of the calendar year could be up around up to 1.25%.
I got a target of 175 at the end of the year.
Okay, 175,
and then a couple more, but spaced. In February and May, and that's it.
And on a wait and see basis. So
No, you go hard early when you know. See, the risk is that you push rates above. You push it hard into the contractionary range where you're really affecting the economy.
Then you've got to start reducing
them. So it's safer to go faster when you know you're not going to get to that level.
Yeah.
And then be more cautious.
And Steve, you're happy with what do you see?
I think that's fine. House prices coming off a bit. The thing that I don't see a double-digit price falls. Look, there might be the odd city where we get the double-digit price falls, but the thing that I keep keep at the front of my mind when I'm looking at house prices is the experience in 2002 to 2008 when the RBA hiked 300 basis points. What happened to house prices? They rose 32%. Why? We had an extremely tight labour market that people were willing, able to borrow, to bid up property prices, even in a rate hiking environment, because that's when the unemployment rate back then was falling from 6 to 5 to 4. And while people, might not like paying higher mortgage rates, who does, of course, the way that I view it too, it's much, much easier to pay your mortgage, even if it's a big one, if you've got a job, and even if you've got a small mortgage, if you're unemployed, it's pretty hard to make your repayments. So that's why, to me, a strong labour market is something of an antidote in terms of house prices to the rate hikes. And as we've touched on earlier, the borders are reopening. So that underlying demand from people coming back, you mentioned an intrastate migration to Queensland, spot on. Australia's going to have, I think it was 235,000 people next year coming into the economy. They've got to live somewhere. They've got to rent. They've got to buy. They've got to do something. So demand for housing from international forces will come back.
Thanks very much, guys. Really appreciate it.
Thank you.
Right.
Thanks, Bill.
Bye.
Thanks, Mark. Yeah.
Bye.